Hello there and welcome to another video. Now before I begin, if you have any questions, leave it in the comment section. If you want more videos, subscribe. So the big question on everyone's mind, everyone outside of the stock market, is what's the chance of losing my savings? Now you've probably heard a lot of things about the stock market, some good, some bad, some good stories, some bad stories. Now I'm just going to really quickly give you the key numbers in terms of the chance of losses when you invest in stocks. So I'm going to be looking at the US stock market, right, which more or less represents the whole stock market. Okay, so there are two indexes we use to when we talk about the stock market in the US, and those are S&P 500, which are the 500 largest companies in the US, and Dow Jones Industrial Average, which is like the big stock market index. So these pretty much represent the stock market. So what's the chance of a bear market? So what's the chance of the stock market ending negatively in 1 year? Now for the S&P 500, it's 1/3, pretty much exactly. For the Dow Jones, 1/3, the exact same. So 66% of the time the stock market goes up, 33% of the time it goes down. So the chance is quite low. Now, okay, so anything can happen year to year, but what about a decade? What about 10 years? What's the chance of losing money, if you're patient and you hold your stocks? Well, for the last 100 years or so, these two indexes has 0 negative decades. So 0 down decades, let's just call it that. So as far as we know, historically speaking, there's a 0% chance of losing money if you just put your money in like an index fund over 10 years. So, and another thing to note is right now we're in a bull market, which means the stock market has run for a long time. It's gone up a lot. And the last negative year for stocks was 2009, which was the financial crisis. And the key thing about this is, well, first of all, we've had a bull market from 2010 till 2017. And who knows for how long it's going to last. And what that shows you is, yes, the stock market can go down. And when it goes down, it can really tank. But afterwards, it always jumps up. And it jumps up way higher than it was before it tanked. So even if you invested today and there's a recession tomorrow, this is going to happen. So don't worry about it, okay? So get invested in stocks, you'll do fine. Now, if you want to know more about any of these topics or why you should invest in the stock market, visit investingforall.net.